What is going on, everyone, and welcome to another backtesting session. Before we begin, last week I did promise, or at least intend, to have some music playing in the background because it gets a bit quiet at times. I've not lived up to that promise. I'm sorry I failed you in that regard, but we continue nonetheless. Yeah, over time I definitely will incorporate some background music. The way I wanted to do it today, I think just would have there would have been too many echoes and things. So yeah, we don't have that. But I think today's going to be more of an interactive session anyway. I kind of want to split it up into two sort of parts. I'll backtest for the first 30 odd minutes, where we should be able to get like at least one set up, but probably more than that, just because the plan is a lot less restrictive. And then for the second part of the session, because this is my last backtesting session for the week, taking the weekend off. It is a long weekend too, so technically tomorrow's the last working day. Then your boy's on a flight to Durban. Yeah, so I this is the last session for the week, so I want to do a bit of reflecting on how the week has gone. Um, but yeah, the main focus for today will be on my interim plan, which is the first session where we're not really focusing on one specific concept, which I'm quite keen for. So I think we're entering this new phase now where uh, I'm going to be testing my plan a lot more consistently because each week now, the refinements that I make to it, I think will be more and more incremental. It's not like big changes that are coming in, although I don't know because I am still working my way through the course. But at least for now, and especially as we build up to the 100K challenge, I need to start establishing some consistency. So the factors essentially that I want to test week on week are going to be more or less the same, with a few changes here or there. So I'm quite keen for that, because this is a plan that I've now been trading for the second week now, and I think I've become quite familiar with it. This particular session I started on Monday. This is the plan. I'm not going to go into too much detail on it because I covered this quite extensively in my weekly review. So yeah, I'm not really going to go through it, but I mean I will reference it when or before I take a trade. So if you do feel like you're a bit confused, you can either just go watch that video now, or you'll wait until I take a trade. But it's pretty self-explanatory. This is the execution portion of it. And then in today's session, because in this plan you can see I look for minimum 1:2, just based on some of the lectures that I've watched this week. I want to focus or frame trades, at least for just today, that focus on a minimum risk to reward ratio of 1:3, just because the current lectures I've been watching are quite focus quite a bit on risk and trade management, um, and how you don't really have to be afraid of losses, because if you frame your trade or trades with attractive risk to reward ratios, um, even with a relatively low strike rate, and the examples used were 30% and 50%, then you can still end the month quite profitably, and the year quite profitably. So I think a great theme to touch on, because the session this week has been horrendous to say the least. um, 1, 2, 3, 4, 5, 6, 7, 8 trades taken so far between technically end of Jan, because I began this where we ended our session last week. So yeah, I picked up from that date. So essentially over, what is that? It's like a week or two, or it's about a week or two. Over 2 weeks, about 8 trades. Yeah, arguably some of them, no, all of them met the plan. It's just very aggressive, the way I'm taking trades at the moment, and I think you'll see. So we should be able to get a couple of trades in the session. Are all of them high probability? I have no idea at this point. I'm just taking trades that meet the plan. And, after 20 or so trades, or up until we reach the end of, the second quarter or even potentially to date, then I'll have a clear picture of how that plan performed, and what to change here and there. But I mean, to be honest, each week this plan is going to get revised, right up until we start the challenge, which is where I'll then only revise it after 20 trades. So yeah, look, not a great set of results. One win from these 8 losses, six full 1% losses, and then one where I was able to move to half risk. So strike rate not great. But yeah, this is back testing after all. Um, this is why we backtest strategies, because we need to see how they perform. And I think this is the first session, well, not the first actually, but um, one of the first where I've been, I think, very brutally honest about which trades I'll take, and which I obviously won't. Um, Instead of just kind of observing and saying, "Oh, okay, I would maybe enter here," and then you take that and it's very loose, like some of my other sessions. So I think this is a just a really, like, I'm trading as if I'll this is the plan that I'm trading week on week. And yeah, grateful for the data that I'm getting back from it, because it's gonna, I think, if I can accurately simulate how this plan performs, then that's gonna, inform me as to how I need to amend that plan or revise it or whatever, in live conditions. So hence, I just want to do a few observations at the end of the session. We should have about 10 or so trades. Should be some recurring themes there. And yeah, keen to dive into that. Um, so yeah, quickly though, this is a trade I'm currently holding. Only trade I've taken for the week. It's a USDZAR short. It was a 1:3.5 R. Um, just starting on the daily, if you can think back to the checklist, we were at premium, at literally optimal trade entry. The 4 hour was, in fact, bullish, so counter trend, just with this large impulsive move here. So counter trend on the 4 hour at the time, and so when the trade is counter trend in that nature, what I look for, well, depending on if my entry is pro trend or counter trend. In this sense, pro trend, because it was aligned with the daily bias of coming lower. I needed to have an order block on the daily or 4 hours. So start on the daily, mitigated EPD, current trend, counter trend, and then there's my entry counter trend or pro trend again, because we're coming lower, and then daily 4 hour, mitigated an order block. Um, and we did. That was the order block we saw here, that level there. And so mitigated that, moved to entry. Are we in London, New York kill zone? At the time we were. It was this period here. There's our London open. Is there protraction? It was. Counter to my bias before or during the kill zone open. And then if there is there a key area mitigation or time-based liquidity sweep with a reversal candle? Let's check it out. Traction, time-based liquidity sweep, and then reversal candle. And what I like about this candle in particular is that the entire candle um, engulfed the previous candle, wick and everything. So you see that's the height of the wick, the low of the wick. We engulfed this entire candle. So very strong reversal sign. Yeah, took that, held it for a bit, was able to get to half risk, and then over the course of today, achieved 2R, where I then closed 50% of the position and then moved stops to break even. And so we've bagged profit on this already, and letting the balance run. Um, and yeah, if we achieve full TP, which is down here, essentially these are the sell stops I was targeting, but um, yeah, because we are within, this is a daily order block. I rather put my TP just above there. Um, so yeah, what we'll see is this was this low resistance range that we managed to clear, and I think we're just pulling back now. We got into out of the range, and yeah, it just seemed like we're correcting now. But yeah, I'm still bearish on that, but we are within this 4-hour fair value gap. And this is actually where I was looking for scaling during New York session, but I think just didn't manage to get it. I think there was some news that restricted me from taking something here. So yeah, bit of a long intro, but let's take some positions. Yeah, about 20 or 30 minutes actively taking positions, and then the last 20 or so minutes, um, I'll just try and dissect some of probably I'll look at the losses first, and just see uh, if there were any recurring themes in those losses, and maybe what I can take away from them. Not to amend now, but yeah, over the weekend, probably Sunday evening. That's the only bit of work I'll do. Yeah, when I'm just looking at the plan for the week, missed trades and all of that. Yeah, just to determine what adjustments I need to make for the following week. So starting on the daily time frame on USDZAR. This is our daily range. As you can see, we are definitely within premium. Yeah, geez. So this is, look, there's a low time frame order block there. There's one above here, but there is also this daily order block here. But I'll refine that on the lower time frame. And so jumping down to the 4-hour, 4-hour is now bullish, pending confirmation though. And I say that because we had this breakout here, but we haven't had that continuation. We broke out quite impulsively. This is driven by NFP largely. And remember, if you just think back to our liquidity sort of session, um, a lot of orders resting above these highs, well protected orders way above here, a lot of resistance to the upside. Hence, price found less resistance, um, trading down through this range here. And we're getting subsequent lower lows, lower highs, lower lows, lower highs, lower lows. The only thing that then forces the market to break through this resistance is, these high impact news events, where the market becomes very volatile and is able to, in a very short period of time, clear, yeah, these high resistance areas. So that's what we saw with NFP. But the daily, didn't really change. We are still bearish. We mitigated that premium. We formed and we came back up and mitigated this order block. I like that we had never tested this order block before. You can see we had a large fair value gap before. We came up, tested it, reversed, and now we are slowly trickling higher. But yeah, hence until we break up here, I'll say it is counter trend, but to be confirmed. Um, but yeah, we are heading higher slowly but surely. And I think in this order block, we should see potential reversal to come to the downside and continue that daily trend. But at the end of the day, it's not about what I think. These sessions have been quite cool where I'm just looking at how price is essentially playing out on the lower time frame at the market opens. And then I have two scenarios basically. If you're protracting higher or protracting lower, I see what confluences may be at play. And then if any one of those two scenarios meets my plan and price plays out that way, then I take the trade. So it's quite an objective way, I feel, to approach the market and to approach these sessions because my bias, at least my high time frame bias, is either being confirmed or denied. And yes, I may take a loss in the process, but at the end of the day, like I was saying, it's all data that contributes towards making more informed decisions down the line. Um, so yeah, let's continue. So I literally, because I've started on the 4 hour, I've identified um, where we are. Okay, this is the 4 hour swing. We came down, mitigated equilibrium. We technically should be coming to run these highs here. We had 1, 2, 3, 4 closed above. We technically should be coming above here because we did come down into equilibrium. I think we could good potential that we're going to run those highs, but then potentially these are well protected, so we may not run those. And then yeah, potentially mitigate. I mean, invalidate this order block, which then may see price come up higher here because we did have a near miss of this daily run of liquidity there. So in that case, the 4 hour trend will also be confirmed to the upside. We'll just be pulling back deeper into discount, which are trades we still can take if they meet the criteria. So a few options. Let's just see how price plays out. Cue music. Music would have been perfect at this time. So what I like to do just before market open, and this is what I do in live conditions as well, is I just identify what areas we could potentially run liquidity in. There's sometimes two, usually only one, and that normally informs me what the bias will then potentially be. And then also looking to the left to see what areas there are. Firstly, on the minute 15, we've got a few areas here where we can just run liquidity, nothing major in terms of order block or fair value gaps. But then also just looking on the 1 hour as well to see if there's anything there. Again, just areas, and you see this kind of gravitated towards there, but just areas where we can potentially run liquidity. But coming back to the plan, remember for an entry, we just need a key area mitigation. So on the 15-minute, either a order block or fair value gap, or a time-based liquidity sweep with a reversal candle. So the only constant there is the reversal candle, but I can have either or between a key area mitigation or time-based liquidity sweep, which then is paired with that reversal candle. If I have both, then look, the more confluences, the better, and that adds probability to the setup. But I only need one to take a trade. So yeah, let's see how this plays out. We see that it does run liquidity. And technically now, so going back also to my daily checklist, yes, we have mitigated EPD, as I call it. What is this? We've mitigated EPD. Currently counter trend. Entry is pro trend. Because if we protract higher, that means then we're looking to distribute lower. And so what do we need if we're looking pro trend? We need an order block. So high time frame conditions are met for sell. Um, Execution, are we within kill zone? We are. Traction, we do have. And then obviously we just went through this last criteria. Then we're just going to frame the trade to see if it achieves 1:3, remember, for this session. And if we, I mean, if we do have that, then we can put on the trade. So let's see. So we have run that liquidity pre-session open. Um, So yeah, we at the session open now. This is one where it's like a bit trickier, and I normally just leave it up to discretion, where we've gotten all our confirmation, and then at the market open, we could take the trade. Um, of late, I've just been waiting a couple of candlesticks post market open because um, oh, I moved this by mistake. It's not market open. There's our 9 o'clock, and then that's 4, yeah. Okay, so we're not at market open yet. Because yeah, normally we can get confirmation before market open, but we then get the a lot of volume coming in post market open. So actually, for the purpose of the session, I'll stick to the way I've been executing, but that's something I want to yeah, kind of see in my observation sort of session is what trades are kind of being taken prematurely. If I'm taking it at the open, yeah, and not waiting for that volume to potentially come in. The risk is obviously missing the trade if the volume comes in and price impulses in the direction that I forecasted. So hence, I've just been executing at the open if the trade meets the plan. Mm, Exhibit A. Anyway, um, so yeah, we've gotten this, but then again, this could just be a run of liquidity in itself. Let's just see how it plays out. Obviously, at this point, I'm not going to take the trade, even though it's a big correction down. This is so far from where I was wanting to execute. Stops are typically on average, if you look at what I've been taking, average 500 pips. And so I want to play in that range. Yes, there can be a few outliers. But yeah, geez, it's a bit far from where I normally take the trade. But again, we just need to frame it to see if uh, if it meets the criteria, then why not? In a sense, uh, it'll be it technically does. Um, because yes, that's the only thing though. We have all this resistance here. Not a nice place to be trading into. But obviously this is kind of where price will probably gravitate to run these orders to the downside. Um, so hey, let's put on the trade. This is at the open. We've had a break lower. after we ran liquidity, 650 stop, which is actually not terrible. It's pretty decent. And so we begin. This is just a journal or template that I use. This is on Notion, and I'll just go ahead and fill in the details. And I think just looking at the position, if we are going to uh, trading view, back at it again. Um, yeah, look, if we're going to come this low and we've got a fair value gap, I will target, I'll extend this. So Michael normally says price, extends 20 pips beyond, the low of, if we're targeting sell limit orders or, well, in this case, sell limit orders. That's for pairs like Euro USD. On USDZAR, I find a 20 pip range is probably the equivalent of like a 400 pip odd range, and that's just from testing the pair a bit. So I'm going to extend my stop about 400 pips, or my TP about 400 pips below. That gives me about an extra R. So yeah, some of this is you'll see is a bit repetitive. So like this, I actually don't know because I'm not going back in time like that. What's going on here? Um, yeah, it's conservative. Like here, pips because yeah, this was kind of extracted from my daily sort of forecasting template, and then my tags I don't really use here, just because, like I said, mainly extracted from my daily forecasting template. So with these tags, I'll use them in my advanced self-review journal, but not here for the purpose of this. Um, I'll do the 15 and the 1 minute entry. I won't do 4 hour for now because it may project price a bit too far into the future, and we need to manage it accordingly. So that's all I'll do for now. This is what I just fill in pre letting the trade play out, just because I want to manage it as if I would have taken it. But this just ensures that the criteria has just been met, and this is need to change this. No, this is an entry criteria. Yeah. So yeah, let us see how this plays out. Find you. I'm looking for this to extend to 512. Just 1 hour to move to half risk. So we're now entering New York session. We've done nothing. We would technically be protracting lower. Okay, so we've achieved 1%. This 5170. Yeah. So now we apply the half risk method. Um, So basically, what we've done, for example, if we took a 1% trade, um, price moves 1% into profit, we just reduce the risk on the table. So now we've essentially got 1% floating, but only 0.5% at risk. And yeah, that's basically what that is. I don't think any more needs to be explained. And then yeah, so the next target is 13,000 times 2. Yeah. Yeah. Because at 1:2, we then close 50% of the position, and then move stops to break even if we achieve 1:2. And just looking at how prices played out, we've essentially protracted lower here. We have run this liquidity to the downside. While I'm in positions, I don't look to take any more positions until the current position's closed out, unless it's a scale-in of the current, move that I'm capitalizing on. But I don't take anything counter to the position that I'm in. I don't really, I guess that's hedging in a sense. But I will analyze each session just to kind of see how price is going to play out and if there would have been a trade, to take. Counter trend, we would need a 1 hour or a 4 hour key level because the trade is now counter trend to the daily bias. And we don't have, well, I don't want to look at or we can actually go back a bit. If we actually just take this back to, yeah, that should give us, just so we can see what's on the 1 hour. We technically do have an order block here. And of late, I've just been using the bodies, so I will keep it consistent in that manner. Order block resting below that level there that we actually did just trade into, as well as then on the 4 hour, we don't really have anything on the 4 hour. So as per the counter trend setup, and I'm just doing this for the purpose of showing you guys, what may have been available if we weren't in this current position. We can see currently counter trend is my entry counter trend or pro trend. It's counter trend. So 4 hour, 1 hour price just needs to be within a key indicator area. So that's order block or fair value gap during London or New York kill zone. If we are, then we can execute. If we aren't, then we don't get a trade. So yeah, that's essentially, and I'll leave that order block on just so we can see price seems to have violated it. So I don't think it would have been valid. But I mean, we didn't close. So let's just see how price plays out. We're not necessarily going to take it. Um, and yeah, I think once I'm in, I can just let it play. And no, we violated this a bit too much now. We're not going to use that. So essentially, no trade. And we've headed lower, but something, and I haven't had a scenario like this um, yet, where I'm holding a position overnight and it achieves 2R. Again, going back to the theme of wanting to simulate positions as far as possible. In this circumstance, it's midnight in SA. I wouldn't be up to manage this. So would I close this for 50%? Probably not. I'd be sleeping. So similarly in my back testing, I'm not going to close this now. Rather, the first time I check the chart is normally around 5:30. Um, that is normally when I get to the gym. If I'm going to gym that morning, if I'm not going to gym, then yeah, I'll normally wake up around 5:30. So that's normally the time where I check the chart to manage any open positions. So in that fashion, I will only manage this position once, yeah, price gets to that point in time. And if we aren't at 2R anymore, then that's actually a tricky one and not something that I've thought of. Do I just close, for 1R, for example, or do I wait for price to get back to 2R and then close? I've never been in this situation before. And if I just think on my feet, I think moving to break even and leaving the position as it is, if it's not at 2R yet, seems like the logical thing to do. And then setting an alert for 2R, and once price gets back there, then I can close it manually. But yeah, otherwise, just obviously implementing at least one of my management strategies instead of just leaving the position exposed until we eventually get back to 2R again. So let's see how it plays out. We have gotten to 5:30. So I will move this to break even. And yeah, just wait for price to get back down to that 2R level where I will then close it. Oh, that's annoying. Whatever. Um, then just input our original 25170, our original TP. But yeah, I know where price needs to get to. So I can check this out. Okay, so we have gotten to 2R. What I normally do then is, and I should have actually done one at half risk. Um, but I will just add screenshot there, and then I'll normally comment. Yeah. So 50% closed at 2R. So we essentially have at the moment 1R floating with no risk exposed. Yeah, because if before we closed, we were at 2R, closed 50%, 1R. Technically, if we, yeah, then if we get to TP, we'll just calculate it again. So now I don't really do anything until price either, stops me out or, yeah, hits TP. But now I can also start looking for scaling opportunities. And so, like we did previously, um, just looking at, and I think today we'll only go over this trade because I did say I wanted to spend some time just reviewing results. Geez, if we get time, I don't know how long I'm going to be in this for. But yeah, looking for scaling opportunities here. We have prices now. We've mitigated that order block. We in the short position, and now if I just go back to the checklist, we have for our trend, what direction is the current trend in? To be honest, technically still counter trend. Is my entry pro trend or counter trend? It's pro trend. It has price mitigated an order block. It has though this time. We mitigated and we pushed off, we're scaling in, so we can go and execute. That's why I didn't specify is price at an order block or in an order block, because I just made allowance for those trades where price has actually mitigated the order block and now trading in the direction of that primary trend, and we're just looking to hop on that. So mitigated, that's our time-based liquidity sweep that we can look for. And then what I normally do is just adjust this to 150. That is that price there, just so that yeah, that just sits there, and then the chart just seems a bit cleaner. So yeah, we've got now, I can see just a fair value gap resting above this area here. That is a one-sided gap. So let's see. What I should do though is just this. Um, just so that I know where that is, because I can't actually set an alert right now. So we've technically protracted lower here. We did run this liquidity. So yeah, no trade for me because we are, yeah, that is not counter to my bias in terms of that protraction. we are getting dangerously close to this fair value gap that's resting below here. And so will be interesting to see how price behaves the closer we get to that. I think that's obviously going to attract price into it quite aggressively. So let's see. We might not get this pullback that I'm anticipating. And we just continue to kind of tumble. Goodness. Definitely news there. So yeah, geez. In one candlestick, that is the trade done. Um, so what I'll just do, about that. And then what I do is basically now just go on the other time frames, 4 hour. It'll be uh, exit. It just needs 4 hour and daily entry screenshots. So I wonder what happened on that day. So yeah, I just want to see more so how price is behaving on the day. Um, Before entry, even though this did play out. And then from a daily perspective, yeah, how we were looking. Daily isn't always relevant, and I think you'll see on some other screenshots that I don't normally actually do the daily, but we were in a high time frame key level here. Um, so that was the trade. We essentially closed out now. So closing date. Okay, so I don't take things like slippage into consideration. Um, but yeah, I mean, with this, there may have been a little. Um, but it looked like momentum was slowing around the area where my stop was. So result is 1%. Remember, we got to 2R. We closed 50% of the position, so basically banked 1%, 1R, and then stops moved to break even. And that's where we were ultimately stopped out. So 1% win. A shame though, because I think we were floating over 3%. Yeah, 3%. So, yeah, geez, if we had kept that original TP, would have hit it. But then again, the opposite kind of happened that I was expecting, because I thought we would come deeper into this fair value gap. And instead, this is where we kind of reversed from. And so that's actually a point to note. Potential overestimation of targets, because we saw a strong reaction from that fair value gap at New York Open. Could have been coupled with some news, but potentially it was just that area where we had a large buildup of orders. So just to give, yeah, a bit more context around where the area at which we impulsed higher from, that may come in handy when we're looking over things. And yeah, geez, to be honest, I didn't think we would get a trade that I would break down in so much depth, because now my bandwidth feels a bit depleted, and now I must look for insights. So probably won't do that today. But if anything, I did mention last week that in my weekly review, that in the next backtesting session, after this one, so next week, because this week, I won't be posting a review, weekend off. So any changes to the current plan will be covered quite extensively in next week's backtesting session. And I think that session will probably be more going over the changes and a bit of a weekly review. And then we may backtest a bit towards the end. But yeah, I will just do a deep dive on what the takeaways were from this week's backtesting of this interim plan, because this is obviously going to contribute to the 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 changes that I make to that plan. Yeah, and obviously the back testing, well, I'm not going to do too much back testing the weekend, but probably Sunday, Monday, and Tuesday, the back testing I do over those 3 days of this trading week, and then subsequently changes to the plan that I've made. That will all be covered in next week's back testing session. So that is the session, guys. We'll probably not get too many more trades on this plan. Well, here at least. Obviously, each weekend I will backtest the previous week. So I could add it to this template technically, because it counts as the interim plan. But I'll just define that under session 4. It will be week 32 backtesting, just so that it contributes to this data here. But I don't know. I'm also not trying to contaminate these results, because this is very much from Q1 right through, and then that other session is just a back test of the week, the trading week. But it's the same plan, so I'm sure the insights that I get from that backtesting session this week, I can correlate to insights that I get from here, and all of that will go into how I then revise my plan going forward. So that is the session. Don't forget, consistency is the choice you make when you start doing the things you know you should be doing day in